Welcome, Forex traders. We are going to take a look at this particular currency pair and this particular situation. You can see the prices at the bottom of the Ichimoku cloud. Which pair is this? Find out soon after we go through the PowerPoint first of all. We're going to take a look, of course, at the charts later on. But first of all, we're going to take a look at the disclaimers. We're going to take a look at the euro, pound, dollar, yen, Aussie, and the webinars in March. But first of all, the disclaimer explaining that this online material may not be suitable for everyone. To get the corresponding info on charting conditions and any other details, please take a look at admiralmarketsglobal.com. And of course, there is a disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and we do thank you for your attention. So, this month's or this week's webinars, what do we have? Well, today on Monday, we always have the weekly Forex recap with Tarantula. Tomorrow, Wednesday, and Thursday, we have live trading labs with various topics, for instance, Fibonacci. And on Thursday, we have, of course, our usual pro learning labs. We're going to be taking a look at the best take profit zones. So make sure to join. It's going to be an awesome webinar. First of all, let's take a look at the euro dollar. Of course, we had lots of news events last week on the Eurozone and in the US. And this is the price action that has followed suit. A lot of upside, as you can see. And if we look at the oscillator here, a very strong reading. Okay, so I'm definitely looking for a potential for this euro dollar to continue with the upside. The one thing is, though, that we are very close to resistance. As you can see here, these purple lines indicating a pretty hefty resistance. The 139 is a pretty big top. So price could stop and make a bigger retracement. What kind of retracement? For instance, back to the 38.2 fib. For instance, even lower to the 50 or 61.8 or even the 78.6. Those could be bouncing spots for an upside continuation. One way of doing that is putting a fib on this downside here, and we can see that the minus 272, the minus 61.8, the minus 1000, and the minus 1618 line up with the Fibonacci retracement levels as well to give a very interesting confluence. So that is potentially possible, a bigger retracement before we move up, but an upside seems likely considering the fact that we've had 5 waves here and also a very strong oscillator reading with a lot of momentum, and we're still in an uptrend if you look at the 4-hour and daily chart. This is the 4-hour chart, and we can see the uptrend here. If we connect, for instance, these bottoms and the tops, you can see a channel like that is easily possible, for instance. So no doubt about that. If we do break above those resistances, once again, then the targets are these minus 272 targets, minus 618, and etc., all the way even to about 142, 143. That is potentially possible. Of course, the upsides will have its ups and downs as well, but that is something that I'm looking for this week. Something like this. Pound dollar has had a lot more ups and downs, is a lot more corrective in nature, as we can see. Looking at these purple lines, you can see kind of a very slow corrective pattern unfolding. Now before that, we still had a very strong upside. So there is the potential for that to continue, but the question is when and where. If we put a fib on this upside, you can see that the price stopped at the 38.2 fib. So the next potential bouncing spot could be the 50 fib, or if price does break above this top line, then we can see an immediate upside continuation probably, for instance, up to the target minus 272 at 170. Next one on our list is the dollar yen. Taking a look at Thursdays and Fridays action, we can see a break through the purple line right in here where I have the green circle. So we are seeing a bounce on the dollar yen. We already had, of course, a bounce to the upside at the 50 fib. Right in here we can see. However, there was a lot of sideways movement after that, and wasn't too sure if that was indeed the bouncing spot. But now that we got a break above purple, we need one more confirmation, I would say, a break above magenta, and we have one more breakout trade to the upside. Still have this major top in play, though, to be aware of. If that breaks, then we can see more upside potential up to the minus 272 and the minus 618 targets right in here at 107.75 and 110.80. So these are the spaces, potential spaces to the upside. Let's see if that materializes. But we did get a break of purple. Let's see if we get followed through this week. Now the currency I was talking about at the beginning of the video was actually on the USD 1-hour chart. We can see a pretty hefty downside here compared to the uptrend that was potential to continue now. Let's take a look at the fib maybe, for instance, potentially at the 38.2 or the 50. Oh, it's in between. So let's see if this is a bouncing spot right in here, or if we still make some small dash to the 50 fib. So if we look at the bigger context here on the AUD USD on the daily chart, we can see that we're trying to push through the 38.2 fib on Thursday and Friday, although not fully successful. So we are seeing a retracement here. Let's see how far that retracement can go. If we get close to this bottom, though, there is a chance we could bounce and maybe go up to the 50 fib. If we bounce and then break to the downside, then the target could be the bottom here. So that would be an interesting bounce or break spot this week, probably on the AUD USD. That wraps it up for today. Thank you so much for joining. Hope that you will join some of these webinars this week. I think we have great content coming up this week, so looking forward to see you then. Make sure to take a look at Admiral Markets and social media, and see you all soon. Cheers.